Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. It is Monday, October 16th, and you are tuned into a video here on our YouTube channel. Of course, if you like this video, please give us a thumbs up and consider subscribing. So today we're going to talk about semis and software. And if we look at the equal weight or say small and mid cap versions of these ETFs, XSW and XSD, we can see weakness. Both are below their 200-day moving averages and in downtrends. Now, if we look at the large cap versions, IGV, which is software, it's still holding up, but the breakdowns we're seeing in the smaller mid cap versions could be bad omens for IGV software and then the semiconductor SPDR SOXX. So let's take a look at these charts. So I think it's really important that we watch what's happening with software because it's one of the strongest groups right now, and it is helping keep the technology sector up, which is keeping QQQ up. And if software breaks down, then they would join semiconductors with a breakdown, and that would be bearish for the technology sector, and by extension QQQ, then SPY, basically the broader market. And so that's why I think we really need to watch it closely. And with these breakdowns we're seeing in the small and mid cap software and semiconductor ETFs, I think that is a bad omen for the larger cap versions. So if we look at this first chart here, it is XLK. And we can see a lower high there from July to early September and another potential lower high here in October. So there's a clear downtrend here. We had a break below that August low. It didn't last long and we bounced, but we're hitting resistance at about the 2/3 retracement and turned down on Friday. So that could mean another leg lower and a test of the 200-day moving average. Now let's look at software. So here is software IGV, and you can see we roughly have a couple of equal highs there in July and in September, and software held above that August low there. So it showed relative strength by not breaking below that low, and then it got this bounce here last week in a short-term breakout. So that's short-term bullish, but my concern is that the weakness throughout the broader market and the group itself, small and mid-cap software stocks, is going to weigh on this ETF, and it's going to break support and come down possibly to that 300 area. You can see that broken resistance level turning into support. Yeah, the 200-day is there, but I would target a move to around 300 if we break support. That would also confirm a double top there and be a bearish situation for software. So I think if that happens, then you can expect technology, QQQ, and SPY to go down as well. Now, in the indicator windows, we have the trend composite, and you can see it's been bullish since February. It remains green. And this indicator is part of the Trend Investor Pro Indicator Edge plugin. You can see in the bottom right-hand corner, there's the link for the plugins. Now, this is a longer-term trend following indicator. You can see when we had the breakout here above these highs from November, December, and above the 200-day, it turned green. And by similar means, just in the opposite direction, I think if we break support here in the 200-day, we'll see that trend composite turn bearish. The other indicator shows IGV relative to SPY. And you can see this ratio chart has been above its 200-day since the middle part of February. And that means IGV is leading SPY. And it remains above its 200-day, and it still is one of the strongest groups. And that's why we need to watch it, because if it starts breaking down, that means the leaders are starting to break down in the stock market. Now let's look at SOXX. So here's the semiconductor SPDR, SOXX, and it is made up of large cap semiconductor stocks. And if we look at this chart here, we can see a lower high from that late July high to early September, whereas IGV had an equal high. So it looks more like XLK with a downtrend here. And I think we have another lower high in the making. So we have an overall downtrend. And I think that this pattern here, if you look at this advance that we've had since October, since late September actually, it looks like a rising flag. So you came down, you're oversold, you get a bounce. That's a bear flag because it's rising. And if you break flag support, then that's going to target a move down towards the 400 area. And the reason I mark support in the 400 area is you can see these lows from February, March, and April there. That's targeting the move down to around 400, the next support zone. Now here you can see the price relative, and it's not as strong as IGV. This is SOXX relative to SPY. And so it tested the 200-day, and it's possibly turning down and breaking below the 200-day to signal that SOXX is going to start lagging the market, and that would be a negative. And you can see the trend composite there remains bullish. Again, it's a trend following indicator. It's not going to catch a top. It's not going to catch a bottom. Trend following indicators lag. And so that's why it will trigger a little bit later after you've had a move. But I would think if we break flag support in the 200-day, then the trend composite would follow with a negative reading. Now, why would I have a negative bias, which I do, on the semiconductor SPDR, SOXX, and also the software ETF, IGV? And that is because if you look at the broader versions of these ETFs, the equal weight versions, which basically favor performance for small and mid caps, those two have broken down. And so that tells you that the average stock within each group is not performing very well. And I would expect the larger caps to follow eventually, especially if you look at the situation with Russell 2000 and the equal weight S&P 500. They're already back testing their lows. So there's a lot of weakness within the broader market. So here is the equal weight semiconductor ETF XSD. And there we can see the high in July and a much lower high there in August. And we're in a downtrend. And we broke the 200-day there in mid-September and remained below the 200-day. So basically you had a decline in September, and then you had a flat consolidation. Whereas, SOXX had a bounce. This one just traded flat, and we already broke support. So it looks like the equal weight version of the semiconductor ETF is already heading down. And you can see the next support is going to be from these April, May lows in the mid 170s. If we look at the trend composite, you can see it turned bearish there in September. So we have a downtrend ruled for XSD. And then you look at XSD relative to SPY. Well, you can see this price relative broke its 200-day in August and remains below its 200-day and trending lower. So the average semiconductor stock is underperforming. The average semiconductor stock is below its 200-day moving average and is in a downtrend. And so I think that is a negative for the group, and I would expect SOXX to follow. So here is the equal weight software ETF XSW, and we can see a similar situation as we do with XSD, the equal weight semiconductor ETF. Basically, we have a lower high there from July until early September, and we had barely a bounce there from late September. Pretty much had some sort of a consolidation, looks a bit like a flag, and we're breaking down. If we break that flag, then that signals a continuation lower, and you can see the next supports are going to be in that 112, 113 area. So basically, you have a sharp decline, a consolidation. We started declining last week. Looks like we're breaking down again. We're back below the 200-day moving average. And if you look at the price relative, you can see the equal weight software ETF here is underperforming because it is below its 200-day moving average. So that's why I would expect further weakness. The trend composite remains positive, but if I look at the other evidence, like below the 200-day, we've got a flag break in the making. I would expect this also to turn negative, especially if we continue lower towards 112. Now, I'll briefly show you the difference in the weightings between these two ETF pairs that I just talked about. This is SOXX, the semiconductor iShares. And if you look at the top 10 holdings, you can see the weightings there on the right-hand side. The weightings range from around 8.5% to 4% for the top 10. And then if we look at the equal weight semiconductor ETF, XSD, we look at the top 10 stocks and the weightings. It ranges from 3.23 to 2.92. So you can see this is a much more evenly distributed ETF when it comes to semiconductor stocks. It reflects performance for the average semiconductor stock, and the average semiconductor stock is not performing well. The same is true for software. If we look at IGV, we look at the weightings there on the right here, we can see it ranges from 8.76 for Microsoft down to 3.24 for condensed design systems. And if we look at the equal weight version of the software ETF, we can see the highest weighted stock is Splunk, 0.89%, and the lowest of the top 10 would be 0.8% Vertex. So there are a lot of stocks in this ETF, and they are relatively equally weighted. So if you're looking to gauge performance for the average software stock, this is the one to use, and the average software stock is not performing well right now. So the analysis in the video that you've just seen are part of the Chart Trader report, which comes out on Tuesdays and Thursdays and does include a video. And I will be putting out another report tomorrow morning with a video. Last Thursday, we went over the upside targets for this oversold bounce in SPY and QQQ, and also discussed the RSI range for QQQ, and it is hitting momentum resistance based on its RSI range, and that's in Thursday's report. And then tomorrow, I'm going to go over some weakness that we're seeing throughout the market. Small caps, housing, ITV's below its 200-day moving average. And then I've got a handful of stocks that I see breaking down as potential bearish setups. So check out trendinvestorpro.com, Chart Trader, if you're interested. All right, so that is it for today's Chart Trader video. Thank you very much for tuning in. I'll be back again on Wednesday with another update. So if you like this video, please give us a thumbs up and consider subscribing, and check out trendinvestorpro.com for more information on Chart Trader. Thanks again and have a great day.